Today, let's talk about the upcoming Bitcoin halving, whether the hype is justified or we're all getting worked up for no reason. We'll also talk about whether exchanges actually have a responsibility to educate traders. Have some been negligent? Has a recent effort from FTX, does it actually make sense? So we'll talk about all that and more in today's episode. What's going on, everybody? It's your boy Crypto Bobby, and I'm joined by my co-host Colton. What's going on, man?
What's going on, Rob? How are you, man?
Good. Just, sitting indoors, doing my thing per usual. So always a good time.
Yeah, same as the last, 35 days now?
Yeah. We're stuck in New York, stuck in San Francisco, just getting by. So
Yeah.
today, let's talk a little bit about the Bitcoin halving because we got less than a month now, which is, first of all, I mean, it feels like time's flied just from, I feel like, the Bitcoin halving always looks so far away, and it is now almost, it's it's here basically, and the hype is starting to. I mean, there's always been hype. It's always been something that people have pointed to, but now we're really starting to see the conversation pick up. You're starting to see the screenshots of Google Trends, and the Google Trends are going up, and this is going to make the price go up, and this is going to do this, and this is going to do that. So today we're going to talk a bunch, I think, about just the Bitcoin halving in general and whether the hype is justified or this is going to be a really disappointing thing. And then we'll also talk about something that FTX has done recently with a quiz, essentially, to make sure you're qualified to trade on certain assets and why it might actually be a good idea. And we'll finish up after Pump It Dump It with some questions from folks in regards to careers in the crypto world. If you don't know by any chance, Colton and I, we are Proof of Talent, and we run a recruiting firm that works with blockchain and crypto companies. So a few people reached out, asked us about questions in regards to careers in the crypto industry. So if you're interested in that, make sure you stay tuned for that. But first things first, I think, want to talk about the elephant in the room or the hottest thing in the room right now. Maybe it's not the elephant in the room, but stock to flow. Like Bitcoin, the halving is coming up, and S2F. If I see it one more time on Twitter, if I had $1 for every time I saw it on Twitter, I probably have a lot of Bitcoin.
Yeah, and I think, what might be helpful too is just kind of explaining what the halving is really quick. That the halving, it comes every 4 years. Like I think it's 210,000 blocks, which comes out to about 4 years, and that's part of the monetary policy that Satoshi embedded into the Bitcoin protocol. It and essentially when miners receive that reward, it gets cut in half every 4 years. So it's a big event. In 2009, I think the reward was 50 Bitcoin per reward, and then
You can mine on a
25.
computer back then.
I know, right? Jeez, wouldn't that be nice? If 50 Bitcoin. But then 25, now 12 and a half, and soon to be 6.25. So that supply is set in stone. That schedule is set in stone. So a very unique part of Bitcoin's monetary policy. And then, like you said, this stock to flow model that popped up kind of out of nowhere. I think it was probably a couple of years ago now. By
Early 2019, I think it was.
Okay, early 2019, yeah, and that stock to flow model, it gets a ton of hype. I mean, it's super bullish, saying that Bitcoin is gonna hit 50K, 55 to 100K in the next 2 years at least. So that's pretty bullish. No wonder everyone loves it.
Yeah, and so I think what's interesting is there's a whole debate that rages right now too, because look, most people that buy Bitcoin at this point in time or hold Bitcoin, you might have some ideological reasons for doing so. You disagree with the Fed monetary policy right now, especially right now. You disagree with a lot of things governments are doing. You disagree with central banks, etc. But a good amount, I would say the majority of people might not even buy it for ideological reasons at this point in time. They're buying it because they think the number is going to go up. And when you look at number going up, things that people really get attracted to are kind of theories as to why that number might go up in general. And stock to flow is one of those models that allows individuals to kind of point to and say, hey, this is something that has predicted essentially the price or kind of has demonstrated the rise of Bitcoin in the past, and we believe that it will, result in that in the future as well. And for those, who aren't, I guess, super familiar with it, just, in general on the stock to flow model, you essentially have stock, which is the, outstanding supply or the existing supply of Bitcoin, and flow is the, new Bitcoin that's mined on a continuing basis. And the Bitcoin halving is something that is going to reduce the flow of Bitcoin that gets mined substantially. So it is, when you think about it, I think for me, the reduction in flow is obviously a bullish thing, but I just don't know if you can really point to at least stock to flow in particular and say, okay, this has been correct in the past. It is absolutely going to be correct in the future, and we're going to see this massively bullish, huge price swing.
Right. It's pretty much, you know, predicting will scarcity drive the value for Bitcoin's price, essentially. So that's what it's trying to do. I mean, we've got 11 years now of data, which is, in the grand scheme of things, not a ton of data. And so I don't know. I go back and forth because, it's a model that hasn't been broken yet. The fact that it's so bullish, it makes me skeptical. But at the same time, I think the folks that had no, it hasn't been disproven, the model, like it hasn't been disproven yet, or we would have seen that all over Twitter. There's lots of opinions, and I think that I'm just excited to see how it pans out here as this halving approaches in the next month.
Yeah, totally. And I think, I mean, for me, I don't want to necessarily say it's a problem, but I do have. There's a lot of charts that also point back to 2009, 2010 type timeframes, and even like going into 2014. Like those to me have like I have a little bit of difficulty with those just because I think the market was so different back then. When you look at the infrastructure and you think about the types of vehicles people had to invest in Bitcoin, and the types of ways that you could potentially purchase, mine it, the different financial instruments around it, be it, something as kind of not necessarily simple, but something like BitMEX's, kind of XBT perp swap, the different options that you might have on Deribit, the different ways miners can hedge now. Earlier on, like in the very early stages, it was just basically buying Bitcoin or being able to mine Bitcoin, and not really having the effect of some of those other financial instruments. So it'll I don't know. I have somewhat of a tough time looking at the very, very early stages of Bitcoin and the price performance starting at basically nothing and the rise up and kind of continuing on in that type of pattern. But I do think that there is merit to stock to flow as a metric. And I do think that ultimately the halving is something that is it's a positive for Bitcoin's price. I think it would be, I think it'd be relatively insane to say you're going to cut the flow in half of new, basically new Bitcoin mined, and that wouldn't have some type of bullish impact. However, when you think about what also drives Bitcoin, drives Bitcoin's price movements, things like that, you also have to look at, venues like BitMEX and venues like Binance or Coinbase, etc. Places, the Coinbase is the Bitstamps, the places that basically BitMEX uses in their index. Those are a lot of the places that lead price discovery, and obviously the miners and miners selling new Bitcoin, that makes a difference. But is that the only thing that makes a difference? No, it's not.
Mm-hmm. Yeah, and one more thing I want to touch on in the stock to flow is people relate it to gold stock to flow as well. The stock to flow of gold, which is, just to break it down a little bit, get in the weeds for a second. The stock to flow, it's calculated. You divide the total stock, the yearly production, the flow, by basically the production rate. So, for example, like gold has the production rate of like 3,000 metric tons, and the current stock of gold is around like almost 200,000 or 185,000 metric tons. So if you divide 185,000 by 3,000, you get 62. So that's the number that is attached to gold's stock to flow. Bitcoin's right now is 27. So, it's not after the halving, it'll be 52. And the higher the number, the more scarce the asset is, which is why I think people, Bitcoin's the digital gold. It's gold 2.0. So any way that you can find to relate it to gold,
Yep.
stock to flow adds to that, and he kind of drives that scarcity narrative home.
Yeah. Yeah. And when I look at everything just in general and the halving, I think kind of going back to it, like for me at least, I do think that the halving is bullish. I just don't necessarily think that it's going to have the huge upward trajectory that a lot of other people are looking for right now, just taking everything into consideration, the macro environment, what's happening around the world, just the investment landscape. Like I don't necessarily see a ton of capital all of a sudden flowing into Bitcoin. But I mean that could be wrong. I do think it is bullish. I do think, in the mid to long term, the price is going to go up. I just don't necessarily think like, okay, boom, halving happens, whatever it is, May 4th, 5th, May 30th, you're going to see, $50,000 Bitcoin or something like that. I think it'll be a slow, gradual burn. But for, the people that have been here for a long time, since 2017, 2018, you've already been here for 2 years. What's another few months for you?
Yeah, might as well wait. This is my first official halving, so I'm stoked. I'm stoked to see what happens. It'll be interesting to see like how the difficulty adjusts after the halving. Miners have to turn off their rigs because they're not able to cover their operating costs, and the more efficient miners get to they get all those block rewards while a lot of the network has shut off their rig. So it's really interesting to see that first difficulty adjustment. I think in those first couple of months after the halving,
Mhm.
that's when you're going to see the impact of this halving really take shape.
For sure, for sure.
Yeah.
And kind of beyond the halving too. So I think exchanges are definitely a hot topic, and I brought up BitMEX and some of these other exchanges, and the I don't want to say negligence around exchanges, but for a lot of these cryptocurrency exchanges, they're starting to offer more advanced investment products. And if anybody wasn't paying attention, so Binance is obviously like basically the largest crypto exchange. They listed these bull and bear tokens that are from FTX, which, if you're not familiar with FTX, it was founded by Alameda Research, who is like constantly, it's basically a quant crypto fund, always in the top 20 on the BitMEX leaderboard. They've been crushing it, trading crypto for a long time, and decided to create their own exchange, which is FTX. They have an FTT token, etc. But they have these leverage tokens, which are like ETH bull, ETH bear, and in that scenario, you buy the token, it essentially gives you 3x exposure to that said asset. So if you buy 3x, buy $5,000 of ETH bull, it gives you $15,000 worth of that exposure, and vice versa for bear. So it was somewhat of a confusing scenario, and Binance added the token and didn't really give, I think, a ton of guidance to people. And I think a lot of individuals might have just seen, hey, this is a bull token, this is a bear token. I don't really know what that means, but it sounds cool. I'm going to buy it. And so eventually Binance, I guess so many people got wrecked trading these tokens, and they were getting negative feedback based upon it, that Binance delisted these tokens. And as of now, on FTX's own site, which is kind of the original place where these tokens traded, the most liquidity, etc., FTX now has an exam before you trade these leverage tokens. So they ask you about basic mechanics. There's a daily rebalancing with these tokens to kind of get them to supposed to be to par. They talk about the returns that it would be that you would earn as a trader. So essentially making sure that you are a knowledgeable trader and you know the product that you're trading. And it kind of brings up like an interesting debate a little bit, is this type of thing, is this actually good for the crypto industry? Should this almost be the norm? And not every product is maybe this complicated, but I do think that type of like questionnaire almost is helpful to educate some of these rookie traders per se, who are throwing money around willy-nilly and have no idea what they're actually trading and end up losing a bunch of money. And then you see them in CZ's mentions on Twitter saying, hey, I bought ETH bull and I lost all my money even though ETH went up. Why did that happen? Etc.
Yeah. Oh man. I mean, I'm all for it, to be honest. I'm all for over educating. There's a lot of young investors and people that and wannabe traders in crypto, and I do think there needs to be more education around these kinds of products. You can't just toss them onto your exchange and just let people have at it because this happens. So I'm all for the education. I think it'll only benefit people in the long run. But if you're trading leverage, like you got to do your research. You got to know what's going on. There's no reason to get liquidated, and especially because this asset class it's so nascent.
Mm.
There's not a ton of liquidity on some of these altcoins and things like that, and a lot of these alts you can leverage trade, and without liquidity, sometimes things happen. You see those massive wicks just clear out stops for days underneath the price. So it's brutal, but so you got to be educated, and I'm all for these exchanges putting out content for these young traders and investors.
Yeah, especially when it comes to leverage trading and anything on margin, like you should really, really understand what you're trading. And I mean, there's something to be said about having some element of personal responsibility. Like
That's true.
I do think, yes, it's good that FTX is basically quizzing these traders, but at the same point, like the opposite side of my head says, nobody is putting a gun to your head and saying, okay, you need to long this asset that you don't know what you're trading. So why should somebody else that knows what they're doing have to take that test or whatever it might be? But at the same point, I feel like it is helpful, and the more education, the more educated people are, the better. But sometimes you just can't fix stupid, unfortunately.
Yeah. The barrier of entry is already so low that maybe this will raise the bar just a tad.
Yeah. Small incremental improvements over time.
Exactly.
But getting on to our segment, Pump It Dump It. If you weren't around for last week, we have new segment on the pod, Pump It Dump It. It's basically a hot seat, cool throne type scenario. Pump it, something that's going to go up. Dump it, something that's going down. And for me, kicking this week off on the Pump It side of the house, I'm saying people spending their stimulus checks on dumb shit. Anybody, I guess, who's making, I think it's $75K or potentially under $100K in the U.S. As an individual, or under $200 as a family, you're receiving about $1,200 depending upon certain things from the government. People are starting to get those checks. You're seeing it on Twitter. People are dancing, doing little jigs, etc. Pretty happy about receiving that. And I'm not going to tell anybody what they can spend their money on, but I do. I'm seeing a lot of tweets about people spending their stimulus checks on crazy stuff. Should probably just throw that in a rainy day fund for right now. But who am I to judge?
Well, in New York and San Francisco, that's like a dinner for four. So there you go. After this whole quarantine's out, just take your family out for dinner, and there you go, $1,200 down the drain.
Yeah, it's
oh man,
doesn't go a long way in some big cities, but I'm sure in other. I mean, the vast majority of the country, or at least geographical area of the country, I'm sure it does go a long way.
I can't believe it's come to this. It's funny, Trump bucks hitting people's bank accounts. Pretty wild.
Yeah, I don't know. I'm still like at a loss for. You're starting to see, and we've talked about it on a few of the past podcast episodes, but people on the like reopen the economy train, and that start of that I think that line of thinking is getting louder and louder, and we're starting to see the numbers trail off a little bit, as far as, at least in New York for me. Mm-hmm. Starting to see new cases trail off a little bit. And some of the data, at least on like the coronavirus stuff, looks like it's improving, and maybe it's under control. So you're starting to see a lot of people just kind of banging the table. There were some protests in North Carolina yesterday, in Raleigh, about reopening the economy and reopening the state. And they were, I think, a few people were arrested for protesting, and it's just a whole big crazy. I don't even really want to get into all of that much, because it's such a hot button topic. But the longer this stuff goes on, even the people that are super excited about the $1,200, if you lose your job, $1,200 isn't going very far. So, if you're out of work for 3 months, even if you're making minimum wage, you're making a lot. You're bringing in a lot more than $1,200. So we'll see how this stuff shakes out. The longer it goes, I think the louder those reopen the economy, get the businesses moving. That stuff's going to go louder and louder.
Yeah, for sure. Definitely. Um, my pump it for the week. What is pumping is Andreessen Horowitz. They came out, I think it was yesterday, announced they're aiming to raise another second crypto fund, aiming to put about 450 million into that fund, which is great. If you're not familiar, Andreessen Horowitz, A16Z, infamous VC, and just one of the first movers in crypto as well. They invested in Coinbase early on, which I mean is kind of a household name, of course, and now valued at about 8 billion. So they definitely were one of the first movers there. And I thought it was interesting, a lot of with the turmoil in the markets, not only crypto but traditional markets, people are being a little bit more careful with their investing and spending. So where a lot of other VCs are hesitating on crypto,
Mhm.
um, A16Z is not. So
Right.
I think that's interesting. They've always been kind of ahead of the curve or the tip of the spear when it comes to hot new tech and new industries, computer software, SaaS especially. So it'll be interesting to see how that performs. I know they have their first form or their previous fund is I think more of like a 10-year fund. So they're not really going to touch that for 10 years. I think
Mhm.
that was the idea there. So we'll see how it performs. I mean, I like that they're willing to get out there and invest, because there's still a lot of great companies out there, a lot of great products, and amidst all the uncertainty, they're pumping some money into the market.
Yeah, and they also have it's now remote, but crypto startup school they launched um pretty recently. So they started doing that, which is basically like an incubator, kind of like a Y Combinator type of situation for specifically for crypto startups, which is cool. I think a few people have tried to do something similar, but I think that A16Z is one of those companies or one of those VC firms that has the resources, that has the talent, that has the money to really make
Mhm.
shit happen for companies. So if you have a kind of a no-name VC firm saying, "Hey, we're gonna have a startup school for crypto," like that's cool, but is it gonna really go anywhere? Probably not. You have A16Z come out and say, "Hey, we got a $400 million fund, and by the way, we can teach you how to build a company in this space." I think that's really interesting. And to that point too, it's like not only are they and they get some flack too, I think a little bit just as far as their involvement goes. I think they're pretty involved in like the maker ecosystem and a few other kind of like blockchain ecosystems in general, but they are like a relatively speaking like pretty crypto native investors. Like they know they're not just throwing money at like let's say the Coinbases of the world now at least. They've obviously invested early stage in those companies, but they're also kind of investing at the blockchain layer. So in like some layer one, layer two type projects, they're
Mhm.
investing in kind of a variety of organizations throughout the ecosystem, which I think is pretty interesting.
Yeah, agreed. I think they've always been one of the more top tier, VC firms. So always good to keep an eye on. I love when stuff like this comes out in the midst of just market
Yeah,
uh, turmoil, and
totally.
price drops. Like this is good news, and keep your eye out for these kinds of things. It's kind of good news. I mean, this stuff is what makes me bullish on just the industry at large, and for the next
Mhm.
10 years and beyond. This is the kind of stuff that gets me all jacked up.
Yeah, yeah, absolutely. And so flip side, what are you dumping right now?
I am dumping small businesses. I mean, they are dumping, and I feel
Sir,
bad.
we
I
are
feel
we are a small
terrible.
business that proof of talent.
That's a good point. We are pumping. We are not dumping. But just small businesses across the country. I mean, it's so tough out there. Mom and pop shops, people that rely on foot traffic. I mean, these places are just suffering. Little restaurants, on the corner, coffee shops, you name it. So these small businesses, a lot of them haven't received their relief funds. As a matter of
Yeah.
fact, I think it was Pomp that tweeted out an article about Harvard just netting a crispy 9 million in aid from the government
Wild.
today, and not to mention, this is Harvard, the same Harvard that has a $38 billion dollars in their endowment, and then that's the largest in the world. So I mean, they have cash, like they've got
Yeah.
money, and here they are getting another 9 million from the government for who knows what. I mean,
Yeah.
but I'm thinking of the mom and pop shops. I'm thinking of the coffee shop on the corner. Like, where's their help? Where's their relief? A lot of them haven't gotten it yet.
Yeah. Yeah. And I mean, I've been like kind of checking out the Reddit small business sub. If you're interested, if you're a small business owner, that's actually been a pretty interesting place recently, especially if you apply to the payroll protection program, which is basically like a loan. It's actually the way it's set up. If it's efficiently delivered, which it really has not been efficiently delivered, but the way it's set up is actually pretty solid for small businesses, where basically you get a loan equivalent to about 2.5 months payroll and some other general expenses. And if you use that loan for 2 months for employee payroll to maintain your staff and not lay anybody off, then either a portion or all of that loan is forgiven. And if not, it's a 2-year loan at 1% interest. So it's really good. But there's been a lot of inefficiencies as far as the administration and the applications of those loans. So that's through everything from from JP Morgan Chase to Bank of America to PayPal to like the Cabbages of the world and the Funderas of the world and like that type of thing. So a lot of business owners in like the R small business, it's basically just, if you check it out, it is a subreddit just full of people talking about their applications, because a lot of small businesses are really in a rough place, not having enough to to make payroll or to coming really close to making ends meet, and this type of funds would be critical to help them kind of stay the course with payroll. So hopefully that stuff goes through. But yeah, it's I mean, it's a wild time, and it's tough because you even have these like larger businesses that, there was an article I posted on Twitter earlier today about Wall Street Journal, or from the Wall Street Journal, that Ruth's Chris, which is a steakhouse, I'm sure a lot of people in the U.S. know, like a steakhouse chain, and got like $9 million in I don't remember the number off the top. I thought it was $9 million for the payroll protection program, and they got it in 4 days. So it's supposed to be for small businesses. Ruth's Chris, I believe, is part of a publicly traded company. And there's definitely a clear prioritization if you have a solid relationship with your bank, and if you have a lot of money.
Right.
So not so much of a prioritization when you're a 2-person recruiting firm working out of your apartment, etc. So yeah, it's really, really tough times for a lot of
and on a
companies out
positive note, I think just out here in San Francisco, there has been definitely a rallying with the community here in SF, just around the small businesses, as far as ordering out people, helping out and supporting their community as best they can. I think Uber Eats, for example, all the fees, a lot of the fees they get go directly to the restaurant that you order from, just to help them out. Additional, revenue stream, however small it may be at first, you add that up over time, it really helps them out. So, people are really stepping up and helping out their local community. So that's definitely a positive. It's just it's tough to see that prioritization kind of misstep in some of these situations.
Yeah, absolutely. And on my end right now, kind of going off that, one of the things I'm dumping right now, or I'm not really dumping, but people are dumping, so I'm dumping, is cities. And you're starting to see a growing conversation on Twitter and elsewhere about cities suck. I'm stuck in I'm in New York, Holden's in San Francisco. I'm stuck in New York. I'm stuck in San Francisco. I'm going and buying a massive plot of land in Montana or North Dakota or somewhere, and I'm getting out of here, and I'm gonna live freely now that I can work remotely. And to me, it's a little bit funny, just because, like, especially a lot of these people that are like have only lived in cities, and they have to stay in their apartment for a month. Now they're like, I'm moving to North Dakota. It's like, move to North Dakota, see how you like it, and then when you're back in whatever city you're from in 5 minutes, like, it's just relax, take a chill pill. But I do, overall, I don't think that there's people that are talking about this mass exodus from cities, and I just if you want to move out of the city, fine. Maybe you'll lower my rent. That's absolutely ridiculous. My rent will never be lower, but maybe it'll stay the same year over year. So I wouldn't hate that.
Yeah, I mean, over time, maybe over long enough time, maybe some more people will start to reevaluate their situations. I mean, in San Francisco, paying a couple $1,000s for a 2-bedroom apartment isn't great.
A couple thousand? You mean
Yeah, a couple.
half of
Yeah, right.
10,000?
So, I think people at least will start to explore some alternatives.
Yeah.
I'm still waiting for, Boulder, Colorado to get cheap. Maybe someday I've got that way out
luck.
there,
Good luck.
it's too nice there,
Yeah.
but if the market crashes, I'll be keeping my eye on places like Boulder.
Yeah, I mean, we'll watch and see, but there's some interesting discussions around like what this time working remotely will do for a lot of people.
Mhm.
And yes, I do think it will increase the amount of remote work that's done in general. Do I think the entire economy is now just going to switch to remote forever? No. There's still, like, I listen to different podcasts of different business leaders and things like that, and there's still a lot of, I would say, older school people that are like, you know what, like, there is no replication for being in the office, especially CEOs. Is funny. Like, I was listening to a podcast with a guy who's a CEO of another recruiting company. It's kind of like in our industry, and he was like, yeah, this is, everybody's always worked in our office. I've always worked in our office. This is really freaking me out. Like, I don't like this at all. I make everybody message me at 7:30 in the morning when they get to their desk. I make them let me know when they're taking lunch and they're leaving lunch. And I'm just like, that is not how you do remote work, buddy. But you know what? It's your business, so you do you.
Yeah, I bet that guy is a big handshake guy. I bet he's a big handshake guy.
Big handshake guy.
And he's going to be bummed out when people stop giving out handshakes after this is all over.
Elbows only for him in the future.
Right.
But so finishing off with the last segment that we have, and this is job interview tips. And the past few weeks we've given a few different job interview tips. But this week I posted a tweet and asked people to respond with different questions that they had about finding a job in the crypto industry. And again, for anybody who doesn't know, Colton and I both run Proof of Talent, which is a recruiting firm that works with companies in the blockchain and cryptocurrency world. Colton primarily is on the recruiting end. I do a lot of work on the recruiting end with the company side. But we work with like 15 plus different companies in the industry, primarily in the US. And we got some good questions. So wanted to answer those. So if you're interested in that, interested in a career in the world, crypto world, I always have a link in the description for Proof of Talent. But the first question we got was from somebody named Patrick. So shout out to Patrick. And his question, I think, is applicable to a lot of people. But he said, I'm not an engineer or a developer. What other positions or skill sets are valued and needed in the crypto industry? So maybe Colton will kick that off with you.
Yeah. Great question, Patrick. It does, I think, resonate with a lot of people out there trying to penetrate the industry some way, shape, or form. I would say, aside from the more technical engineer, product management type roles, a lot of the roles that we see out there are operational. They're sales and business development, a lot of partnerships, marketing, legal, customer service. Even I think one thing that you can kind of point to and look for when you're out there job searching on your own is the larger the company, the more diverse the roles are going to be.
Yep.
These small startups, especially in crypto, are still very technically focused. They're building a lot of their products out. So they need those engineers, they need those product managers and those developers. So the smaller the company, the less likely it is that they're going to have roles outside of the technical realm. So if you're looking for those kinds of roles, like I mentioned, the sales, the marketing, the legal, the customer service, the ops, target those bigger companies. They're more built out, they're more stable, and they've got more opportunity.
Yeah, but I would definitely agree with that. I think there's essentially a trend, especially in the industry. The companies that are like the seed stage companies, most companies are venture backed, but some companies that are like the seed stage or maybe even the Series A, but primarily seed stage, early stage companies, they're still building product. And when you're building product or you haven't kind of completed the final vision or at least the final initial vision of your product, there's not a whole lot to do maybe outside of that. And some companies do hire for maybe marketing to build product awareness, etc. But if the product's not done, do you necessarily need a sales? Do you need somebody to handle operations if you haven't completed the product? So for these early stage companies, the bulk of their hires are going to be more on the engineering side of the house or on the technical side of the house to help bring that product to life. And then once they actually have a completed product, something that can be utilized by customers, whether that's consumers or institutions or whatever it might be, then that's when you see they start to add those other kind of avenues of the business, more marketing people, more sales people, maybe more legal hires, more customer service hires because they actually have customers, that type of thing. So I think you definitely hit the nail on the head there.
Yeah, I'll go jump on to the next question here if that's
Yeah,
cool.
of
I
course.
think this one's from Ben. Shout out to Ben. Thanks for submitting the question. He asked for someone who doesn't have an obviously transferable skill like a developer. What's the best way to make oneself attractive to companies hiring in the space? Is it to develop specific skills or apply one's existing skill set in a specific way? For example, if I'm good at writing, should I start writing about my personal perspective on the industry? Great question, Ben. Rob, why don't you take a stab at this one?
Yeah, so I like how Ben mentioned applying one's existing skill set in specific ways. I do think that that is a really good approach to take. When you're looking at being able to apply your existing skill set in a specific way, I think what you can think about is there are people that have been lawyers or they've even just been in law school, and there would be an SEC ruling about a token, or there would be some type of new lawsuit that came out, and maybe they weren't even practicing lawyers yet, but they would go online and they would read the briefing, and they would do a 10 tweet storm about what happened, and they would build up a reputation doing that because they had some knowledge. They applied that knowledge to the industry, and they were able to build a following and build relationships, and maybe they didn't even end up practicing law after they graduated. They just went into kind of they went into biz dev or operations or something else in the crypto because they were able to build up so many connections. I think doing that where you have an existing skill set, you can try to transfer that, basically take what you know, put your own spin on it in the crypto industry. And I think that will be a very successful approach.
Yeah, nailed it. I agree 100%. Leverage things like Twitter, things like Medium, LinkedIn, post. Don't be afraid to post, to write stuff. Just publish your thoughts. Half of the CEOs, executive teams, and these companies are on Twitter actively all the time. So if your stuff gets retweeted, it gets likes. I mean, the more content that you pump out, the better your chances are of just being seen and it circulating throughout the crypto Twitter sphere. So definitely a good way to do it there.
For sure. And the last question we have is from Vince, and he talks about what is the best transition, or what's the best way to transition from an administrative job, or we can even say any job, but from an administrative job to a junior blockchain developer position. And for me, I think you have some specific thoughts around this too. But for me, I think that the big thing is building a technical foundation. When you look at it's essentially building a house. You're not going to go in. You could think of the blockchain specific development. If you are starting from a completely unrelated industry and you have no experience in software engineering, you think about blockchain development as the roof. Like, you're not just going to put a roof on a on a plot of land with no foundation, no anything outside of that. So you really need to start a strong foundation. And whether that is self-teaching yourself, self-teaching different languages to yourself, whether that's taking some type of traditional boot camp, a Lambda school, any Code Academy, anything like that. And then you move on to the blockchain specific information in particular.
Exactly. Yeah, you nailed it. Just not much to add there other than just, once you get that strong foundation, or even while you're doing that, keep in touch with what's going on in crypto. Understand what's being built, whether it's in the DeFi community or smart contracts. Understand what's going on out there, what's being built. Make sure to stay plugged in so that you're up to speed as you kind of build out your own tool set, and then you can dive right in.
Yeah, absolutely. And it's never. I don't think it's an easy transition, but it's something that a lot of people have found to be worthwhile. And you can certainly, like Colton said, you can keep an eye. You can try to learn as much on the blockchain specific stuff while you're teaching yourself those core concepts. But I do think having a technical foundation is ultimately going to make your life a lot easier when you are trying to learn that blockchain knowledge, rather than just saying, okay, like I'm starting from scratch. I'm in an admin job right now. I have no development knowledge at all. Okay, I'm going to go learn Solidity. Like, you should probably learn some, whether it's JavaScript or Python or whatever it might be. Try and learn some of that first before, hopping into something like, Solidity, or trying to work on the Bitcoin Core protocol or anything like that.
Yeah, definitely a good place to start there.
Yeah, and so that pretty much covers today's podcast. Hopefully you guys enjoyed the job interview tips on that front. And then let us know your thought on the Bitcoin halving. Is it something you're really excited about? Do you put a lot of faith in the stock to flow model, or are you more a little bit cautious on that? And then also let us know your thoughts on exchanges too, and whether or not you really feel like they have a responsibility to educate traders, or hey, that's all on you.
Yeah. Interested to hear your thoughts, guys. Thanks for tuning in this week.
If you need to find us anywhere, so I have all the info in the podcast description, the YouTube description. If you need any help on jobsprooftalent.co, Twitter handles, all that stuff. Until next time, guys. See ya. Peace.
See you guys.